Hey everyone, welcome back to Earnings Call. My name is Jeffrey Beamer. I'm the Senior Investment Strategist over at ewotrader.com. And if you've been with us for a while, you know we don't just talk about stocks. We talk about how to profit from company earnings announcements. Now, this week kicks off a heavy earnings cadence that should influence sector leadership and broader sentiment in the market. So this week we have cyclical, tech, and industrial names, including Boeing, Texas Instruments, UPS, Microsoft, Meta, Apple, Caterpillar, Visa, Mastercard, and more regional banks. In fact, this week it's all crammed into the 366 companies that are declaring earnings this week. So it's a big week of earnings. We will go through the list and also take a look at the best candidates for trades, along with trade updates and a new opportunity for you starting right now. All right. Each and every week, we talk about potential breakout candidates, which are stocks that move double digits around their earnings. And we talk about quiet candidates, companies that move single digits. We're talking about 1, 2, 3, 4 percentage points after their earnings announcements. We call those quiet stocks. And we have different strategies based upon those. All right. So quiet stocks, we're looking to sell premium, and we do it through a strategy called an Iron Condor. All right. Now, the breakout stocks, we do this through Straddles and Strangles. We look for that big pop or that big drop. All right. Now, if you look at our list, you're going to see quite a few names that you might recognize, a few names that you don't, and a few names that you think should be there, but they're not. And we will talk about them. Okay. So just because they're not on the list doesn't mean we won't talk about them. But these are the best breakout candidates on the left and the best quiet candidates on the right. All right. So let's begin with the quiet candidates because there's a bunch this week. All right. And again, let me give you an example. I give you this example each and every week. This is Pfizer. Now, Pfizer does not have earnings this week. Actually, they have earnings next week, but I like to show this chart because this is such a quiet stock. It just doesn't go anywhere. All right. Even through earnings, it only moves 2-3% through the earnings announcement. So it's a nice quiet stock, and selling premium around stocks that just don't move very much can make you good, consistent income through, when you really don't know what's going to happen to the stock. All right. So let's take a look at our list for this week. All right. And you'll see a couple of regional banks there. You'll see a steel company, a few familiar names, a few financial names. All right. As well as one tech specifically there. That's Apple that declares on Thursday. But let's go through our list. We're going to begin with Bank of Hawaii. All right. This is a regional bank. Obviously, Bank of Hawaii actually declared their earnings. They released earnings this morning. And look at this. The stock has only moved about 2.3% today. Okay. So it declared this morning. The average move for the stock is around 4%. So the stock just didn't move. It didn't even move its estimated move of 4%. And this is why we like to sell premium on these names. They just don't move. So how do you make money? Well, implied volatility rushes into the options. We sell options. Okay. We sell these options. We don't sell them naked. We do it through a strategy called an Iron Condor. Okay. That's done at a net credit. The announcement comes out. The stock moves a little, not much. Implied volatility drops. And that's where we lock in our profits. And we do this on a regular basis. And actually, you'll see that in our trade example that we had from last week that we'll talk about this week later in the show. All right. So let's kind of speed through these because there's a lot to talk about. All right. Western Alliance Group. All right. They're going to declare later today, after market close. The average move here is about 5%. Now, these make the list because they're nice and pricey stocks. Okay. They're up near $100, and there's lots you can do through the strategy of an Iron Condor in spacing out your break evens above and below where you think the stock is going to go. All right. Now, another name that you might think is a little bit more volatile, but it's not, is Boeing. Now, look at this chart. This stock since December has gone from roughly $187 up to $250. That's a big move. I'm not concerned with the big move. I'm concerned what it's going to do through earnings. And Boeing will declare Tuesday, tomorrow morning, January 27th, before market open. So first thing in the morning, the average move here is just 6%. Okay. That's what market makers are actually pricing in. Now, this is a great example of a stock where you could actually sell premium through an iron condor. There's lots of strikes up and down the option chain that you can choose from to place your iron condor. Okay. And if you need to learn more about that strategy, there's plenty of online resources, including those through your broker, that tell you what that strategy is. Essentially, it's two vertical spreads combined together, a bear call spread and a bull put spread. So you're selling the call spread on top and you're selling the put spread on the bottom, done at a credit. That is how you make money on these types of stocks. All right, moving on, we have Packaging Corp of America. Again, another $224 stock, expensive stock. All right, they're going to declare Tuesday, January 27th, after market close. The average move here is just 5%. All right, so it just doesn't move very much. It doesn't move double digits, even though the stock has rallied nicely here. We're not really concerned about that, just through the earnings announcement. All that is. All right, another $200 stock, actually up here around 250, is ADP, Automatic Data Processing. They will declare Wednesday, January 28th, before market open, and the average move here is just 4%. Nice little pattern here is this kind of coming into a little wedge pattern. All right, if I were to draw some lines on here, and you would see it narrowing into a point, but we don't expect a big breakout. We just expect that move of just 4% for ADP. Now, another big name is General Dynamics. All right. Here GD has caught a little bit of a rally here recently. They will declare Wednesday, January 28th, before market open. So first thing in the morning, the average move here is just 6%. All right. Just 6%. This is a $360 stock. Now, with some of these that are priced here in the 300s, strikes go every $10. Not all the time, but on many stocks, they will go every $10 instead of every $5 or every $2.50 or every dollar. Okay. They will go every 10. And that makes your Iron Condor a little bit more expensive. So bigger accounts might want to trade this. Your margin on this will be a little higher, but you'll still get a nice credit for selling premium going into that earnings announcement. That's why General Dynamics is on our list. Another one of my little favorites here, because they have a great golf tournament. They sponsor a great golf tournament that's coming up here in just 2 weeks, the Waste Management Open out in Phoenix. All right. So WM, they will declare Wednesday, January 28th, after market close. The average move here is just 6%. All right. So another great candidate for trading an Iron Condor through earnings. Then we get to a couple of financials here. Then Mastercard and Visa both. Okay. Mastercard will declare Thursday, January 29th, before market open. The average move here is about 3%. All right. Just 3%. Always quiet, even though this stock is, you can see it gapping down a couple days in a row and a couple gaps in here. And again, not really worried about that. This is a more expensive stock, so it may take additional margin to trade this, because we do these at a credit. So there is margin that covers the risk. But again, great stock to trade just because it's so quiet. Now, Visa, we need to double check the whether this is before market open or after market close, because it shifted, I believe, recently. So I have an after market close, which a couple of different publications have said they're going to declare. That will be Thursday, January 29th, after market close. So it's going to be Thursday. It'll either be Thursday morning or Thursday evening. And the average move here is 3%. Just 3%. Okay. And on a stock that's $325, the options are typically, there's some premium in those options, and then that premium gets more expensive, and it just makes it a great stock to trade. All right. Now, Apple did make our list this week, and believe it or not, Apple is a quiet stock. It just does not move like it used to through earnings. Used to move double digits. Okay. And there were times when it really, really did. Now, Apple will declare Thursday, January 29th, after market close. The average move here is just 4%. Not expecting anything big and no double digit moves here. Just the market makers are pricing in a 4% move for Apple going into this week's earnings announcement. All right, moving over to Friday, we have ExxonMobil. They will declare Friday morning, January 30th, before market open. Now, ExxonMobil here has had a nice little rally, going from about $115 early in the year, at the beginning of the year, or December, and then now it's at $134. But again, we're not concerned with the overall market movement. We're concerned about what it's going to do through earnings, and ExxonMobil moves about 3%. That's it. Very, very small moves through the earnings announcement, and that could be a really good stock to trade as well. Also, Chevron will declare Friday morning, January 30th, before market open. All the companies that declare on Friday do it in the morning. All right. But Chevron's going to move about 4%. That's the estimated move, and that's actually its average. Okay. And again, that's what market makers are predicting. That's what they're trying to estimate for the move and where to be pricing options. So, sometimes they move that amount, sometimes they move more. You can see the last earnings announcement here. Look at that. Just not much of a move at all, right around that previous earnings announcement back in November. All right. So that's what it looks like for Chevron. And then we'll close out the quiet stocks with American Express. Now, American Express will declare Friday, January 30th as well, Friday morning. The average move here is just 4%. So even with the volatility you see through the earnings announcement and then through the earnings call, just 4% for American Express. All right. So that wraps up our list for the quiet stocks. Now let's move over to the breakout stocks. Now this gets a little bit more exciting. All right. These are the stocks that really grab headlines. They grab everybody's attention. Oh my gosh, I wish I was in that stock if it gaps up, or oh my gosh, I'm glad I'm not in that stock if it gaps down. But we love a good breakout stock, and they can move either direction. And that's why we do straddles and strangles. All right, so let me show you an example of a breakout stock. This is Akamai. All right, so Akamai, they actually declare in about 2 weeks. Okay, so they do not they don't release earnings this week. It's about 2 weeks away. But I like to show it as an example because this is a consistent breakout stock. This stock moves. It will gap up $10, $15 in a heartbeat. All right. And it will move around through that earnings announcement. Very exciting to trade. So we do trade straddles and strangles. And we do buy the higher implied volatility. Okay. Normally, when you buy options, you want to buy low implied volatility. But for an earnings related strategy, we buy the higher implied volatility because we expect that big breakout, either higher or lower. We expect to move. So let's get into our list for this week. There's going to be some names here you might not be familiar with and some names you may be familiar with. All right. And it's a little lighter than our quiet stocks. All right. So let's get down to the list. And then I've got a few more stocks for you, names that you'll want to know about. So hang out here for just a moment. This is Agilicis. All right. We're going to start with Agilicis. If we go to the charts here, we see this particular stock. It's a $100 stock. This company will declare earnings Monday, today, January 26th, but after market close. The average move here is 24%. Okay. This is a mover through earnings. Last earnings announcement, you can see it closed the day of earnings at $115, and then at the end of the next day was $141. So from $115 to $141 on an earnings announcement. That is why we trade these breakout stocks, and we look for candidates that kind of qualify for the breakouts. All right, moving on through our list, Okay, now we have a company called Stride, also known as K2. They're more known for their product called K12. K12, so K through 12. They're an education company. They will have earnings later this week. Let me bring up my little box here. They will declare today, actually, today, Monday, January 26th, after market close. And the average move here is 18%. This stock is also a mover. And look at this. Last move they had, almost 50% cut. Actually, 50% drop. I believe that was about 48% on that drop right there. Big breakout move. And then look how quiet the stock got. Okay. Not just very volatile at all, but that is why we look for straddles and strangles. Even on a stock. Oh, there we go. I'm adjusting. That's a $1 move there. Adjusting my chart a little bit. Sorry if that moves around. You can see it now does have a little bit more volatility. Let me get it to $5 increments. There we go. Okay, so they will declare later today. We anticipate about an 18% move. So the idea here is to get straddle or strangle where the pricing, the debit, when you calculate how much it has to go higher, okay, or how much it needs to go lower, we like to get that around 10%. And then if a stock actually moves on average around 18%, that's how we profit. We profit from that bigger than anticipated move, okay? Now, also on our list for this week, you believe it or not, is UPS, United Parcel Service. They will declare tomorrow, Tuesday, January 27th, before market open. The average move here is 12%. All right, so a transportation company, notably that, we see a lot of volatility in this sector a lot of times, and we're expecting that again this week with another double-digit move from UPS. So watch out for that. VF Corp, okay? VFC is the symbol. They will declare Wednesday morning, January 28th, before market open. The average move here is 15%. Now, you notice this is just a $20 stock, all right? $20 stock, but it can move 15%. So if you can get a nice, cheap straddle or strangle here, this is a good candidate, okay? Because it pops around the earnings announcement. We like to see that. It pops or drops. Last time, again, look at this is about 12% move, believe it or not, here on that drop. And then I don't like to see this where it gaps up nicely in the morning and then shoots down in the afternoon, okay, or throughout the day. That's what that did back there. So this is one we have to watch around when it makes that earnings announcement. You might need to be quick on the trigger to exit after the announcement. So, but definitely one to watch. All right. Okay. Moving on through our list, we have LC. Okay. That's the stock symbol, LendingClub. Okay. They will declare Wednesday, January 28th, after market close. The average move here is 20%. This is also a $20 stock. Again, another good candidate for a straddle or strangle. Very affordable. Normally, you can get these for $200 or $300, the straddle or strangle, compared to some others that are going to be considerably more expensive. And I'll give you some examples. Stick around for just a minute more, and we'll talk about those here in a moment. All right, Deckers Outdoor, they will declare Thursday, January 29th, after market close. The average move here is 20% for Deckers. Typically, a pretty volatile stock. It consistently is, but this is a $100 stock. You're going to be paying more. Your straddle or strangle is going to be about $1,000, maybe $1,200, maybe somewhere right in there. So you definitely watch how much you're risking on these, because you want as little risk as possible, as small as debit as possible, to get that big pop. All right. Now, believe it or not, also on our list is General Motors. Now, this is not on our list, okay? If you remember from the stocks on our list, which we'll show you that list in a moment, I want to give you some names of some stocks that you're very familiar with and you probably want to know about and what they're anticipated to do this week. So we start off with General Motors, okay? They will declare Tuesday, January 27th, before market open. They're expecting a 9% move for General Motors, okay? Now, there's all sorts of news going on with GM, believe it or not. Do they do electric? Do they not? There's always something going on with GM. Are their trucks, going through? Are they going to do a recall on the engine? Just one thing after another. So you'll definitely want to watch GM very closely as we go into earnings. Now, that's the thing. This is the thing. A 9% move, the reason why it didn't make our list is because it's not the quietest of stocks, but it's also not the most volatile of the stocks. All right. You saw Decker's 20% potential move. All right. This is just a 9% move. Same thing with Texas Instruments. Okay. Texas Instruments, Tuesday, January 27th, after market close, also just 9%. That is the estimated move for Texas Instruments going into earnings. Now, could it be less volatile or more volatile? Yes. That's why it's hard to trade this through earnings, and we like to rather watch it. These stocks that are in that 8 to 12% range, we have to be very careful with those. And I'm not talking about $8 to $12 in stock price. I'm talking about $8 to $12 as a percentage. 8% to 12% moves for these stocks get a little difficult to trade sometimes. All right. So we got three more names to talk about, and you'll want to hear them. Okay. Let's begin with Meta. All right. Now, Meta is going to declare on Wednesday, January 28th, after market close. The estimated move here is 10%. Now, this is a $673 stock. Okay. If you just think about this at 10%, which you're not going to get 10% of the stock price as your debit on a Straddle or Strangle on Meta, it's going to be more. But even at 10%, that's $6,700. Okay, that's pretty darn expensive, and it takes a larger account to trade these. Now, with implied volatility rallying, this would I didn't price it out yet today, but this would probably cost you $8,000-$9,000 to do the trade, and that just makes it not worth it. That's why it doesn't make our list. It's just way too expensive to trade. Another one that's pretty darn expensive to trade is Tesla at $438. Okay. Now Tesla is going to declare on Wednesday, January 28th, after market close. The average move here is 7%. So this would be more of a quiet stock, decent candidate. But the problem with that is Tesla is always full of surprises. They could make more, they could make less. And so what we do is we look back at all these percentage moves, and we're looking for consistency. Do you consistently move double digits, or do you consistently move single digits? Meta, Tesla, Apple, okay, they might get a pop of 12, 13% here or there, but then the next earnings cycle, you're in single digits. Makes it very difficult to trade, and Tesla's right there with it. But we are expecting a 7% move. Don't know if that's going to be up or down, but we still expect just that move. All right, and we're going to close out with Microsoft. All right, they will declare Wednesday, January 28th. All right, after market close, and the average move here is 7%. Now, once again, good for an Iron Condor. It's a $400 stock. We could probably build something that gives us where we could tolerate a 7% move and still make our money. But the problem is there are those outliers where this stock has the potential to moving double digits. So we're just not sure. So that's why we just kind of sit on the sideline and monitor, look for consistent movements through the earnings announcement. And, Meta, Tesla, and Microsoft, they just make some erratic, they're one and done, so to speak, on the big moves, and then it's quiet for several cycles. So, but just wanted to include those in our list because everybody wants to know. Everybody's focused on those, and we hope there's good reports from all of these going through the week. All right. So let's close out our session by going through our trades. I give out trades each and every week. In fact, here's our list once again. You'll notice that Meta, Tesla, and Microsoft are not on the list. GM and Texas Instruments are not on the list. Those were just bonuses that I gave out, and their estimated moves that are priced. Again, these estimated moves come from the market makers. Okay, they're pricing the options, and we're reading that information. But here, breakout stocks on the left, quiet stocks on the right. That's how this list is organized. All right. Okay. So as I mentioned, each and every week we do give out a trade, something to watch for the week. And let's talk about last week's trade. This was on Johnson & Johnson. This was a Iron Condor. Again, a stock that we don't expect to move big through the earnings announcement. and Johnson and Johnson made a move, and let's see how we did. It went through the earnings announcement, and that was Wednesday, and we had a little volatility there on Wednesday. Gapped down on the open, but then rallied up, and then just sat there for 2 days, and we were allowed to let this expire worthless. And remember, when you sell option premium and you let something expire worthless, that's not a bad thing. Okay, that's not a bad thing. We will get to keep the entire credit of our trade by letting it expire worthless, and we did. That was $138 per spread. Now, if that doesn't sound like a lot, let's put it in perspective. Each trade here, we're assuming a $10,000 trading account. Okay, we're risking no more than 5% on every trade. So a return of $138 is a 1.38% return on portfolio in just 4 days. 1.34% return. That's a 38% return on risk. Okay, that's what you're seeing there. That 38.1% ROR, return on risk. That's your return on the amount of risk you took. But on portfolio, that's a 1.38% return. And you just do these consistently, and you're looking at 40, 50, 60% returns in a year. Okay, on portfolio. Very, very respectable. All for just trading an earnings strategy. Okay, that number does not include our breakout stocks, which we trade, okay, quite consistently. And if you've been here as we went into the end of the year, you saw some great trades on the breakout trades. And that's what I have for you again today. All right, our trade of the week, the one that we're going to watch for this week is VF Corp. Okay, VFC. We're looking at a strangle. All right, and the strangle I priced out today was a little over $2, a little over $200 per strangle. Buying a call, buying a put, same expiration date. Okay, buy the call, buy the put, same expiration date, same symbol, obviously. Okay, and we're looking for that stock to have that big move over 15%, and we're looking to make money either by the stock going up or down. I don't care. As long as it moves. Okay, so a strangle on VF Corp. VFC, even a $10,000 trading account, even a $5,000 trading account could do this. It's very affordable for a smaller trading account. If you have $10,000, you could probably do 2 contracts and keep your risk very low, okay, under 5% for each trade. And then bigger accounts can obviously do more contracts. So that's our trade for this week. This was a longer than usual session because there's a lot of names that we wanted to focus on, but we like to hit them all, especially the well-known names and the names that people like to hear and like to know what's going on with them. So yes, Apple, Tesla, Microsoft, they all have earnings this week, including all these big names. In fact, there's some big names we didn't even get to this week. So it's a great week of earnings. It'll be very exciting. Everyone have a great trading week, and we will see how our VFC Strangle does right here next Monday. Join us then, will you? Everyone have a great week. I'll talk to you then.